So in this video, I will give you an example of a base reset. Now, one of my students sent me this chart on MarketSmith, but I will show it to you on TradingView because as per the regulations, I have to show you old chart data, at least 3 months old. So on MarketSmith, there is no way to, hide that 3 months data. That is why I will have to show it to you on TradingView. I hope you understand. There are regulations in India, so we have to abide by them. So have a look at this base. It's a poor base. Okay, I will tell you what is the question that my student sent. He was trying to figure out what is a base reset. Okay, and he was confused about this chart. I will explain to you what the confusion is. Okay, but first let us look at this base. By the way, this is base number 3 as per MarketSmith. Okay. The company is AstraZen Pharma. So have a look at this base, very poor base. There is a large falling window. And if I keep the cursor here, see on the right side, not even a single candle has closed above that falling window. That means the falling window is acting as a huge resistance to the stock. So it's a poor base. But if you count the points inside the base, see point 1, this is point 2, then you have point 3, point 4, point 5, and point 6. So there are 6 points in the base. Okay. Both the buy point and the closing price of the latest candle are in the blue zone. That's a squeeze. Okay. Contraction we are looking for. So the high of this candle becomes the buy point, which is 6540. So let us draw a line there. 6540. 6540 roughly. Okay, that's the buy point. Now, would I buy at this buying price? No, because the window has not been closed. So as per our falling window rule, we reject the base. Now, just because we reject the base does not mean that the stock cannot break out, right? The stock can break out. But the question is, what's the probability that after breaking out, that breakout would sustain? Normally, when a stock breaks out, it should go up at least 20-25% above that base before it starts to form another basing area, right? If that does not happen, then the base continues to be in that same base count. So this is base number 3. Now look what happens. I will move some candles further. See, from this point, suddenly the stock shoots up. It goes up like, from this, if we measure, it goes up like 15%. Okay, in a single day. In a single day, it shoots up 15%. Extraordinary high volume. This is like 900 or 1000% more volume than the average daily volume. Okay. And that too from a very weak, very volatile base which has a falling window. So, which means the chances of that breakout sustaining in the long run is very low. Okay. And in one day, if the stock shoots up like 15%, what more can you ask for? It's very difficult to sustain that momentum. And you will notice that the base, that sudden shoot up did not sustain. So I will move the price forward. Okay, let's continue to move forward. This is 2024. Okay. So have a look at this. Does it sustain? See, it's from, this is 4th of July till 23rd September. It's just gone flat. It's not doing anything, which means that breakout did not sustain. Why did it not sustain? Because the base itself was poor. In the description of this video, there is a link called How to Spot a High Quality Base. In that video, I have discussed 10 different points to help you identify whether a base is high quality or not. This is a poor base. Okay. It has a falling window. There was never a buy point here. No, you should not have bought this stock, which is as simple as that. Okay. And you notice that the base did not sustain. But now the point counting starts from here. Wait, let me lock this. Okay. Now, if you notice, the point counting starts from here. So since it has not gone up 20% from the buy point, ideally it should go up 20% from point number one, 25% from point number one before it starts to form another base. But I am measuring 20% from the buy point. It has not done that and it starts to consolidate. So the new point number one is this. Earlier it was this. So now it's formed a new base and it's a volatile base, right? There is nothing in this. See how it breaks out. Again, the stock breaks out from the red zone crossing the green zone. So from red zone is it makes the journey from the red zone, crosses the blue zone, crosses the green zone, buy point, all in a single candle. That's volatility in the stock. Too much volatility. Okay. So now that it has not gone up 20%, this becomes base number 3A and this becomes base number 3B. So basically the base count remains the same. Okay, but it's a sub base. That breakout from base number 3 has not properly happened. That is why MarketSmith website will mark this as 3A, it will mark this as 3B. Okay, after this we should expect the stock to go up and form base number 4. So let's see whether that happens or not. Now it breaks out again. So again here how many points? Point 1, point 2, this is point 3, point 4, point 5. Okay, 5 points in the base. This becomes the buy point. So from here, if we take somewhere here and it breaks out. And it breaks out in a single candle, goes from red zone, crosses the blue zone, crosses the green zone, closes above the green zone. In a single day, it shoots up 17%. It's like it's consuming too much power in doing that. Okay. Do you think that is sustainable? Did this breakout sustain? No, because it came out from a faulty base. Do you think this breakout will sustain? No, because it's gone up too much in a very short period of time, crossing three color ranges in single candle with a very volatile base. You notice after point number 2, how many candles have closed in the green zone before the breakout? Notice after point number 2 in the base, how many candles do you see which have closed inside the green zone during their consolidation? Not a single candle. That's a bad sign. That's a negative sign. Okay. Telling us that this breakout is not sustainable. Okay. This is the reason why you should go to the video description of this video. Go to that video link which says how to spot a high quality base. Watch those 10 points. Watch that video at least 3 times so that you understand what is a high quality base. This is poor quality base. Okay. So obviously this is not likely to sustain. Okay, let's go further. Let's see what happens. Look, now we are in November. Okay. Look, now it has 0.1 in the base. Now the base starts from here. So this is November. So it's 3 months old data. Okay, now the new base starts from here like this. 0.1, 0.2 and 0.3. Now this is called as a base reset. This is what I wanted to discuss with you. In MarketSmith, if you check, they mark this base as base number 1. They don't mark that base as base number 3C. Okay, ideally they should have marked it 3C. Why do you think that is happening? That is happening because the base has been reset. Base reset happens when does the base reset happen? When the previous base low gets undercut. So the low of this base is the low of this candle, which is 6225. Okay. The low of this candle is 6230. So the low of this green candle is the low of the previous base. And if you notice this candle, The low of this candle is 6220. So this is 6225 low and this is 6220. That means this base, point 0.2 in this base has undercut point 0.2 in this base. So 3B suddenly becomes 1. So you might think that a stock has gone from base 1 to base 5 and you missed the whole rally, maybe 200, 300%. But wait, after base 5, the stock might collapse 40, 50% to reset the entire base and then start to consolidate again. So even at that top level, you would be buying the stock at an early stage. So that is the concept of base reset, which I wanted to discuss with you in this video. I can't show you the chart further ahead from this because that would be violation of SEBI regulations. I don't want to show you latest data, but you understand from this. You can check the chart. Okay, you understand that the base did not sustain, that breakout did not sustain. So when the base is volatile and there is a sudden breakout and you find yourself in such kind of breakouts, it's better to sell at least 75% of your position, because if you're coming out of a low quality base, you pretty much know that it's better to take some money off the table, right? And remember, I made a video about Chennai Petroleum when I bought the stock on 15th of July 2024. The video is available on my YouTube channel. At that time, the stock had negative EPS growth, so it was a swing trade. In 2 days, the stock shot up like 16 to 20%. I had put my target at 16%. I took the money, came out. After that, the stock never saw that level. It since that day it has been continued to fall. It never recovered that. So when you are coming out of a sudden breakout, it's better to take some money off the table and move the stop loss to break even. So my student, the confusion he had was, how can this base be base number 1 when this base is base number 3B? Well, you have to look at point number 2. Point number 2, when it gets undercut, that is base number 1, which is good news. Now you are buying the stock early stage coming out of this base. If this base completes properly, like something like this, if this base provides a proper completion like this, that becomes your buy point. Right now, you would be buying an early stage base. So, could possibly go with a slightly higher position size because you are buying the stock early, right? Well, but that depends on a lot of factors: technical, liquidity, comparative, fundamental, market conditions, the whole 9 yards. Okay. But what I wanted to discuss with you in this was a base reset. In this video, we have talked about base reset. We have also looked at sub bases. We have also looked at the quality of the base. And we have also looked at the sustainability of a breakout from a low quality base. Hope this helps you. Okay.